Hey, good day. Bert Salazar here. I know that most of you are now getting ready and you're preparing to do your 2019 taxes. It's February of 2020. Obviously, we're a tax planning firm, so we're now starting to get pretty busy. So now between now and April, we're working 6, 7 days a week, and that's a good thing. But you got to do what you have to do. But many times when we engage clients for the first time, especially at this point in time when they come in brand new to see us, they want to find ways that they can reduce their tax liability for the previous year. Now, for all of you that are listening to me today, I would argue that you need to start doing tax planning, because when you do proper tax planning, you can actually accommodate any type of changes that may happen to you from a taxable standpoint at some point in time in the future. Now, we're early in 2020. I'm already engaging a number of my clients in doing 2020 tax planning to make certain that we can maximize tax or minimize tax liabilities when we get ready to do the taxes for 2020 in 2021. But in any event, what are some of the things that you can do if you find yourself, behind the eight ball? You're now getting all your W-2s, your 1099s. You may be getting some of the 1099 with dividends and interest from, financial institutions that you may have used in 2019. So all of those incomes are coming in at this point in time. And then obviously, hopefully you're doing a good job in gathering all your expenses, all those deductions, exemptions, and credits that you can legally take. Hopefully you're dealing with a tax planner and a tax preparer that specializes in doing that, because a lot of the tax preparers that you will find out in the marketplace do not have the ability to do tax planning. They don't have the educational background. They don't have the software to be able to do that. Many of you, I'm seeing nowadays that some of you have a full-time job, but you also do have a part-time business, or some of you may have a full-time business altogether. Now, how do you file your business tax returns? Well, it depends. If you happen to be a single member LLC, you don't have to do a tax return for that business. You can claim all the income, the revenues, expenses, and so forth through your personal Schedule C in your 1040. So those are things that I look at very closely when we engage new clients. For those individuals are already clients of mine, I already have that inside and out, so I know exactly which way to go. But what are some of the things that you may be able to do if you find yourself that you opened the business in 2019 and you had some gross revenues coming in, and now you got to figure out what expenses you're going to assign to that. One of the main questions is, do you have a home office deduction? Do you have a home office? So if you happen to have a home office, it's very easy for you to do it, and you have to do it the right way. You have to do it legally. But what you ought to do is measure the square footage of your home office in comparison to the square footage of your home. And then to that square footage that you're using as an office, and it has to be exclusively used as an office, then now you have the ability to take some business deductions from the use of a home for a business purposes. So you're able to deduct, a portion of your mortgage payments, your insurance payments, your utilities, all kinds of different things that will allow you to reduce the revenues and offset those revenues by creating some tax liabilities that are duly and warranted given to you by the IRS code in order for you to minimize those tax liabilities for 2019 and beyond. So there are a number of things that you would have the ability to do. Another thing that may be critical is depending on what you think your 2019 tax liability may be, you still have the ability to make a contribution to a traditional IRA, or perhaps even a Roth IRA. So if you earn more income in 2019 than you did in 2018, and you still need a little bit more of a buffer in order to reduce your tax liability, then it may make sense for you to make a contribution to your traditional IRA and then lower your adjustable gross income in order to offset those tax liabilities. But what if you took a capital loss, or what if you did not earn as much money in 2019 as you did in 2018, then perhaps it makes sense, as long as you have enough funds available, to put money into a Roth IRA. And the sooner that you can make a contribution to a Roth IRA, the better off you're going to be, because then, the sooner you're going to be able to waive that 5-year rule that is a requirement for all our Roth IRA contributions. So if you have a Roth IRA that you contributed right off the bat, and let's say you're going to retire in 10, 15 years from now, and then you may want to do some Roth conversions at that time, you're going to have the ability to go back and look at that first year that you opened that original Roth, and that's the date that you're going to be used moving forward. So it may give you the ability to put money into a Roth and have access not only to the principal that you put in automatically, but also the growth of that money on a tax-free basis without having to have that 5-year waiting rule period, because you had already satisfied that rule when you open your Roth IRA originally. So I don't want to take a lot of your time. Always remember that if you need to get a hold of me, feel free to call me, whether it's about a tax question or a retirement question, or if you want me to take a look at your taxes and perhaps help you with that. My telephone number is area code 786-766-1042. You can also email me at Bert, B-E-R-T, at GablesTaxGroup.com. And always remember that my #1 goal is to help you change the way that you see things. Because when you change the way that you see things, the things that you see change. So again, thanks a lot. Let's have a great tax year, and hope that you receive all the tax benefits that you should have coming to you. Talk to you soon. Take care.